Assalamualaikum everyone. Today we are going to talk about basis of Malaysia income tax system. So the first presenter is Siti Nuraliah, the second one is Irdina Madihah, the third one Aliah Syafiqah, and the last one Nurul Ashikin. So there are 7 subtopics in this chapter. The first one is definition of tax. Tax is collection of the share of individual and organizational income by a government under the authority of the law. The second one is to promote welfare and protection of its citizenry. Next is objective tax, to raise resources for the state. The first one is source of national income, to administer the country and to distribute back to the economy through development project or direct assistance. The second one is promoter of economic growth, medium and method for promoting economic growth. The tax system is to minimize the restrictions and economic development. The third one is made of income and wealth redistribution, contribution from people who are able and have the excess income to the government for the poor and the needy, channeled through the ministries, the government.
Next, I will be explaining about scope of charges. Under Section 3 of Income Tax Act 1967 stated that income tax shall be charged for each year of assessment upon the income tax of any person occurring in or derived from Malaysia or received in Malaysia from outside Malaysia. There are 3 categories of scope of charges. The first one is territorial basis, the second one is foreign source income, and the third one is world scope basis. For the first one is territorial basis. Territorial basis is incomes that are earned in Malaysia. The second one is foreign source income. Foreign source income is not subjected to tax in Malaysia except for banking, insurance, and air and sea transport operations. And the third one is world scope basis. World scope basis is resident company and non-resident company are taxed on territorial basis except for resident company carrying on business in specialized industries such as banking, insurance, sea and air transport. Next, I will be explaining about types of taxes in Malaysia. There are 2 types of taxes in Malaysia. The first one is direct taxes and the second one is indirect taxes. Direct taxes are paid directly by those on whom it is levied. For example, income tax, RPGT, stamp duty, and petroleum income tax. For indirect taxes, it is collected via third party. For example, sales tax, service tax, and GST.
I'm gonna be the person in charge to explain about the class of income. Class of income is under Section 4 in Income Tax Act 1967. The first section is Section 4, subsection A. It's about gain or profits from a business. Section 4, subsection B. It's all about the gains or profits from an employment. The third one is Section 4, subsection C. It's about dividend, interest, or discounts. Then, Section 4, subsection D. It's all about rent, royalties, or premium. After that, in Section 4, subsection E, pensions, annuities, or other periodical payments is in the section. And the last one is Section 4, subsection F, all the others gains or profits that is not falling under any of the foregoing classes.
Next is basis period, basis year, and year assessment. Firstly, I'm going to explain about the year assessment. With effect from 1st January 2000, Malaysia moved toward the implementation of current year assessment. The year of income tax is charged after calculation. For example, the 2016 year of assessment is the period from 1st January 2016 to 31st December 2016. Continue with the basis period. Basis period was divided by 2, which is for individuals and for a company. What is basis period for individuals? Basis period for individuals is the income source of a person other than the company trust body or cooperative society will be on calendar year basis. But basis period for a company is with effect from year assessment 2004. Only company, trustworthy and cooperative society can have its basis periods for year assessment to be on either calendar year basis or non-calendar year basis. These are the example for financial year end. If the financial year end ends on 31st March of each year, so the basis period will be on 1st April 2015 until 31st March 2016, and the year assessment will be on 2017. Next, if the financial year ends 31st June of each year, so the basis period will fall under the 1st July 2018 until 30 June 2019, and the year assessment will be at the year of 2020. And the last one, if the financial year ends 31st December of each year, so the basis period will fall under the 1st January 2017 until 31st December 2017, and the year assessment will be 2018.
Next is chargeable person. Under Section 2, the Act defines person to include a company, a body of person, and a corporation sole. So, body of person is an unincorporated body of person, not a company, including Hindu joint family. Hindu joint family means that any income of the family manager or karta in his capacity as such being income by virtue of Section 55 to 59. For resident status individual is under Section 57, subsection A, subsection B, determined by reference to the number of days an individual person is present in Malaysia during a particular year, charged based on the day's stay. For resident status company is under Section 5, subsection 8, subsection 1, determine its resident status in order to enjoy a preferential tax rate and tax incentive. Thank you. Bye.